Boom! What's up, Investor Maniacs? Your boy Night Rider here, and today we're going to be talking about two of the giants of the rideshare industry. You know 'em. We're talking about Uber and Lyft. Up first, we've got Uber. Though technically not the first rideshare app, it's usually thought of as the first rideshare app. Uber is the most iconic and best known in this space. It is used by over 100 million people worldwide and has been... Oh, by the way, did you notice the merch? As right, this is the very first video where I'm wearing my, I know it's mirror to you guys and you probably couldn't really read it anyway. I need to get like a logo, don't I? Like some sort of kind of like easily recognizable logo. I made this like I don't know, like a while back. I cannot replicate it. I spent like a day or two like making this logo. I have one copy of the logo. I have no idea how to replicate it, but I'm like, I'm a YouTuber now. I'm taking myself serious now. I got to get me a logo, get me some merch on a shirt. Although Vistaprint kind of made my shirts like kind of they printed it sideways. I'm like, really? Come on, bro. You do this for a living. You can't like print a logo straight on. But anyway, just notice the nice merch, yeah. So Uber, they're used by over 100 million people worldwide, and they have proven to be one of the defining startups, kind of the notable unicorns, if you will, over the past decade. As with many major brands, Uber is trying to expand outside of its original core practice of ride sharing. In Uber's case, most notably by doubling as a food delivery service through Uber Eats. However, recently has also been attempting to consolidate various other services that it offers, like kind of renting bicycles and scooters, and they're consolidating this into a subscription program, which would allow discounts on standard Uber rides, scooters, and bike rentals. You could get, I believe it's 30 minutes free per day, and you would also get free food delivery, all for a monthly price of $25. Seems, at least from a consumer standpoint, seems pretty decent to me, but then I'm also concerned when something sounds a little bit too good. I'm like, is this just going to be another money-losing thing for them? It's a similar concept, at least people are comparing it to Amazon Prime, and Uber hopes it will incentivize customers to use all of their services more frequently, not just one occasionally, and then switch to competitors whenever it's convenient. Although such a program will most likely trigger greater customer engagement, and it also runs the risk of negatively impacting profitability. So, right, we have to weigh those two things. We get increased customer engagement, but dude, come on, homie. It's like Uber's already losing $3.7 billion a year, and now they're doing something which I'm like, is this really going to help them get towards profitability or get further away? So that is a concern for either sooner or later, maybe they won't be able to raise so much money, or you're just going to see a whole bunch of dilution. So either way, it's scary as a potential investor. Uber has also been growing its services by expanding into new locations such as Hamburg, Germany, and by collaborating with big brands like Starbucks. Rumors have even flown around about Uber potentially acquiring Postmates, which is one of its biggest competitors in the food delivery space. That would be an interesting acquisition if it did in fact happen. Of course, not all the news around Uber is good, as it has unfortunately lost its exclusivity with McDonald's. They had a partnership where if you wanted McDonald's, you had to go through Uber. That is no mas. McDonald's is like, we the big dog. We gonna have our fresh, never frozen quarter Mac Big Daddy's Max going all over, whether you want to do it on Uber or you want to do it on a different service. And for the time being, that additional service is going to be DoorDash. The lost exclusivity deal with McDonald's demonstrates one of the reasons I am not a big fan of the delivery space in general, as I view it to be a commodity. When businesses and customers can just willy-nilly leave you or stop being exclusive to you, that's not a good sign. I am, however, interested in this subscription service, which may very well have the potential to drive significant amount of loyalty if they can get that subscription program to work. But if they can turn that profitable is a completely different conversation. Also, Uber's board has recently lost 3 members, including the media mogul Ariana Huffington. On top of these setbacks, Uber has also seen its competitors continue to gain footing due in large part to their lower prices. We will see over the next few months if a subscription service and more aggressive expansion that Uber they're kind of known for will help widen the gap between Uber and its rivals, even though currently that's kind of going the opposite direction, or if all this aggressive expansion and these subscription services is only going to widen the gap between Uber and profitability. Maybe it's both. Maybe it can be both. All right, now we're going to be talking a little bit about Lyft. That's right, this is Lyft. This is Lyft.com. This is their homepage. So Lyft is apparently a company that shoots diversity videos for the United Nations. Or at least that's what I'm like when I'm looking at this homepage. I'm like, did I go to the wrong website? I feel like I'm not, I was not impressed with Uber's homepage, and I just like, oh yeah, it looks normal, right? Okay, you got the rides and you can earn, that's for working for them, and the eat and the freight. Like, okay, I get it. I'm like, yeah, that it makes sense. I know what I'm looking at, and then I'm looking at Lyft's homepage, and I'm like, is this one of those commercials where you have no idea what the product is, and then at the very end of the commercial, they're like, Viagra, go for the blue pill, and you're like, oh, that's what they were selling. They're selling ride shares. I don't know what I'm looking at. Lyft is the second biggest transportation network company of its type after Uber. And like Uber, it offers a variety of rideshare options as well as rental services for bikes and scooters. Unlike Uber, Lyft does not yet have a food delivery service in place. It was recently announced Lyft COO John McNeil will be leaving the company. McNeil was only with Lyft for about 1 year, so hopefully the company will be able to find a replacement with moderate ease. But for a COO to leave a company of this size this quickly is not a good sign for the internal workings of the company one way or another. Although Lyft does not have the reach or the numbers that Uber has, analysts sometimes view its second place status actually as a positive. Unlike Uber, Lyft places its direct attention on the North American ride-sharing market and focuses almost entirely on basic ride-sharing. Unlike Uber, who, while it being larger, splits its attention across more types of services and more locations. This means that the average rider is more likely to find, say, promotional pricing through Lyft because that's all they're working on, that's all they're trying to push at that point in time. And the average consumer will always pick the cheaper ride, which more often than not nowadays is leaning towards Lyft, regardless of the brand. Because remember, this is a commodity type thing. Consumers aren't going to be loyal to one brand unless maybe Uber can push that kind of subscription service type thing. This narrower focus has also resulted in Lyft having a reputation for higher quality drivers and doing what they do better than Uber. Lyft will also now be a competitor in the self-driving rideshare market, thanks to its collaboration with Waymo, the self-driving tech startup. But can we really call it a startup? I mean, come on, it's like a decade-old startup. Like, come on, homie. After a while, you gotta stop being a startup. You're just not bringing in a whole bunch of dough. Anyway, Waymo by Google, the self-driving company. Lyft and Waymo recently launched 10 autonomous minivans in Arizona, which is an exciting step forward for the inevitable, or at least hopefully inevitable, seemingly inevitable self-driving revolution that will shake up the world and the ride-sharing industry in the coming years. Good job, guys, and shout out Arizona, which has been one of the most regulation-friendly states when it comes to autonomous vehicles. Unfortunately, like all companies breaking new ground with their services, Lyft and Uber have been subject to some pushback. Recently, California has been tightening regulation by cracking down on ride-sharing companies over how they classify their independent contractors as independent contractors and not as employees. If the regulation does go through and California and maybe some of these other states start forcing these companies to kind of label and pay their independent contractors, let's just say their workers, as employees, that will be very costly. There's a reason why they have them as independent contractors. It's not a mistake, right? It's like, well, I have independent contractors. I don't have employees. I have people who work for me. They are independent contractors. It's way more expensive to have an employee. I could not afford an employee. I can afford an independent contractor. That would most likely affect Lyft more than Uber, and that Uber may be able to outlast Lyft due to this. And then maybe down the line, Uber could raise prices if Lyft is out of the game. This is because Uber is better funded than Lyft does, and going down the line, Uber has a superior ability to raise additional funds than Lyft does. This is one of the reasons that Lyft needs to get on top of the self-driving market if it wants to survive potential government regulations. Hey, the government can't decide they need your company to start giving regular benefits to their drivers if there ain't no drivers. Get rid of the drivers, and then your problem goes away. So stay on top of it. But I would stay away from this one, as I would stay away from Uber, and I would stay away from Grubhub to boot. Hey guys, that's it for this video. Let me know what your thoughts are, or if there are any other stocks you would like me to check out. I appreciate all the likes, comments, and make sure you're subscribed to Investomania, brother.